New data from Equifax Canada illustrates that Canadians are struggling to make ends meet. Now, maybe not a surprise given everything that's going on in our environment right now, but we're going to take some time to get into the specifics. Our guest is Rebecca Oakes. She is the Vice President of Advanced Analytics at Equifax Canada. Hello there.
Hello.
We are having this conversation in June of 2025. This is a snapshot you take every quarter or so looking at the Canadian consumer. How would you characterize the results at this point in time?
Well, it's really been quite a difficult economic period, I think. And so when we start to look at some of our data, we see there are some consumers in Canada who are faring pretty well, but there are a growing number who are finding things increasingly difficult. We're seeing missed payments rising, and really some of those individuals are just having a tough time in terms of making their kind of credit commitments.
Certainly consistent with what we see at Credit Canada right now. Some of the headlines here are quite alarming, and I want to outline what you say in the report and also ask you to give some context to these numbers. The first being 1.4 million Canadians missed a credit payment. What does that mean in practice?
So we look at things like credit cards, mortgages, loans, auto loans, lines of credits, any of the kind of traditional types of credit that you might utilize. And we're really just looking at, has anyone missed a payment in the first quarter of the year? And as you mentioned, 1.4 million or more than 1.4 million did miss a payment. And what's kind of concerning is that's up around 146,000 people compared to 12 months ago. So that's really where we're seeing that kind of increase coming in.
Average non-mortgage debt, which is something that we have a good tab on, higher in part due to an increase in auto loans. And your hypothesis is there people were looking to purchase a car before tariffs hit. Do you predict that that's a one-time thing? Is that a one-quarter effect?
Well, I mean, I think it is partly to do with the tariffs. It's also, if you think about the last 12, 18 months, we've had interest rates really rising, and trying to purchase a vehicle when interest rates are super high, if you need to get an auto loan, it makes it more and more expensive to do so. Your monthly payments are higher. So we
Right.
do believe it's a little bit of kind of pent up demand. People were wanting to buy a vehicle and couldn't afford to, and now interest rates are down a little bit. That's helping them out. But as you kind of mentioned, those tariffs are going to be playing a role as well. So we do probably expect that to maybe be more of a short-term effect that we're seeing, and towards the end of the year, maybe into next year, those numbers might fall a little bit if things don't change on the economy side.
Card spending slows, but balances continue to rise. This would indicate that people are falling behind. Is that accurate?
Absolutely. It is around missed payments, but it's also around how much people are paying of their credit card balance if they are still making payments. So what's interesting is we see things like the percentage of minimum payers, so those people who are only making their minimum kind of payment amount each month, that's rising, particularly for younger consumers. So it's kind of a combination of missed payments, but also people just paying that little bit less each month in terms of their kind of balance.
We've been talking about the great renewal for probably, I don't know, it's probably been a year or two now, actually, given how many people are renewing at rates that are significantly higher than what they scored in the worst period of the pandemic. What are you seeing in the mortgage market today?
Well, you mentioned it is a bit of a renewal bubble right now. So the less good news for the mortgage market and kind of the housing market is we are seeing a bit of a slowdown. So we are seeing house sales reducing. They're not as high as they kind of were 12, 24 months ago. But we do have an awful lot of people who are renewing and coming off the back of some of those super low rates that we kind of saw during the pandemic. Now, the challenge, of course, for a lot of people is that means that likely their payments may be increasing because the interest rate they're able to secure now is higher than when they opened that mortgage originally. And so that's a bit of a challenge, particularly if you have a very high balance mortgage. So consumers in Ontario in particular, we're seeing missed payments rising, following those renewals, which is a bit worrying.
Demographically, consumers under the age 26 are having the hardest time paying their credit cards. I was looking at the most recent employment data, and that demographic is similarly challenged from a job perspective. Is it too obvious to be making that such a linear and direct connection?
It certainly is a huge factor in there. Employment levels as they change. It's what we call a shock factor. If someone loses their job, it's very difficult unless you've got a lot of savings and buffer to kind of maintain you through a certain period. It's very difficult to kind of keep making your regular credit payments and things like that. So unemployment definitely having an impact on those younger consumers, but also just the fact that cost of living is still high. I mean, we talk about inflation coming down, and yes, it's below 2%, but that's really just from energy prices more than anything else. Things like grocery expenses, how much food costs in the stores, that's still up kind of 3.8%, I think, in the last numbers we had. So, younger consumers are just less able to kind of manage through some of, that higher cost of living as well.
We've been going sort of through a checklist of inputs and things that Canadians deal with on a regular basis. One of the outputs for Equifax is a score. You publish a score, and your clients use that score in order to make lending decisions. I know it wasn't included in this report, but I'm wondering if you have any insight into the health of Canadians' credit score.
Yeah, I mean, generally, when we look provincially, those average credit scores are coming down a little bit. Now, normally they are pretty stable as a tool, but they are coming down again, particularly areas like Ontario. We're seeing a little bit more movement. Now, there are a few outliers, kind of areas like I think Nova Scotia maybe, where actually the scores haven't come down, but with the vast majority, we are seeing a little bit of downward movement, which does kind of reflect what we're seeing in terms of our data around mispayments and things like that.
I want to talk a bit more about delinquency, in particular mortgage delinquency, because that is something that gets all the headlines. Anytime there's a story about it, especially when you look at a percentage change versus prior period and say, oh my God, it's up so much. But in absolute, it is still a teeny tiny number. What context would you provide that would help our listeners reconcile the paradox of those two things? So like really bad for individuals and really tough for those in that circumstance, but it doesn't seem to be anything that's approaching cataclysmic for the economy.
Yeah, when you look at mortgage mispayments, they are low volume wise and low percentage wise. The things to remember is that generally speaking, as all of us, we are going to protect our home as much as we can. We need a roof over our heads. So the very last credit payment you tend to stop paying if you really can't and you're in severe financial difficulty is your mortgage. So when you see any movement in mortgage numbers, that's alarming. And what it typically means is when you look at the non-mortgage side of debt that those individuals are kind of holding, that's going up sharply as well. So, that is kind of why we get concerned. I think one of the most interesting figures we've seen is if you go back to kind of 2016, 2017, that was kind of the last period where we saw interest rates really rising and mispayments going up. And post that period, we introduced the stress testing here in Canada to try and enable, a bit more ability for consumers to be able to make additional payments should interest rates change. The levels we're now seeing in terms of mispayments on mortgages, we're now back to 2016, 2017 levels. So it's almost, despite the stress testing, which did help, you had a huge impact in terms of mispayments, that stress has crept back to those sorts of levels again. So I'm not sure that helps put it in context, but that's kind of where we are in terms of numbers.
You and I both spend most of our working day focusing on Canadians and debt. And there's a lot of really tough stories, both in the data and in the anecdotes. Are there any positives in your report? Says the deluded optimist over here. Is there anything that we can hold on to that's encouraging to you?
There always are some good signs. When we look at some of the provincial areas where we haven't seen those real high house prices, actually mortgage mispayments, for example, are fairly flat. It's really we're seeing them rise in like BC and Ontario, so they're a little bit good news if you're a homeowner in some of those areas. I think one of the things we have seen, and we talk about it in our report, is around credit card spend. And actually that falling to 3-year lows. Now, what we saw a little bit during the pandemic as well, we actually saw consumers being fairly prudent, actually adjusting their spending behavior, maybe thinking a little bit more carefully before they make those big purchases. And we are seeing that happening now. There is uncertainty in the economy, and we're seeing consumers respond to that. And so, I think that is a little bit of a silver lining, is that, there are a lot of consumers out there who are really thinking about their kind of spending decisions, and that's really good to see.
Rebecca, thank you so much for your time today. We appreciate it.
Thank you so much.
Rebecca Oakes, Vice President of Advanced Analytics at Equifax Canada. She was here to talk about their latest report on the data for Canadian consumers when it comes to their debt.